Everybody on this call basically signed up in IML to learn how to trade in the foreign exchange market. So here's the thing: what is Forex? You're not signing up on or joining something that you have no clue what doing. So we're going to basically start from the basics so you can understand it. Forex is basically foreign exchange. Okay, the foreign and the X in the exchange. And what that is doing is you're trading the currencies of pair. So trading the currency of pair, and a few examples we have on here is basically you have the euro versus the USD. So that's the euro versus the USD. You have the USD versus JPY, which is the US dollar versus Japanese yen. You have GBP versus USD, which is the Great Britain pound versus the US dollar. You have USD versus CHF, which is the US dollar versus the Swiss franc. And then you have GBP versus JPY, which is the British pound versus the Japanese yen. So this is just a few examples. All this is trading the digital. So for example, if you was to go travel to a different country, let's say, you decided you want to travel to London, Great Britain, right? Even if you're in the US, when you go into the airport, you have those foreign exchange booths. You basically trade in one pair, which would be the US dollar. You trading that to get back, Great Britain pound. So all it is, instead of trading in the booths, you're actually doing it digital, which is on your laptop and on your cell phone. So that's all we're doing, trading one currency into another currency and basically getting exchange from it. All right. So some of the things you're going to have to learn and understand, when you're trading. Basically, this is a big one. What is a pip? The pip stands for percent in profit. All right, that's the change in price of the exchange rates. So you're gonna hear pip a lot when we trading, because pips is where you make money or pips is where you lose money. So as it goes up on the graph, you're making money with pips. As it goes down, same thing. So pips, you're gonna hear that percent in profit. All right. What is your lot size? The lot size is the currency unit you will buy or sell. So the lot size, it goes along with the pips, because the lot size is where you actually, it's the first thing you do. This is going to be a portion of your trading balance, a percentage of your trading balance that you're going to use to actually plug in the trades. And then it's going to be the units you'll buy or sell. All right, but the lot size is going to be key. That's the very first thing you're going to do. And I'll actually go into some trades so you can see exactly how this works. All right. TP, let this be your best friend. What is a TP? TP stands for take profit. Now we use 10, basically for a quick take profit. As you become more knowledgeable in this market, you'll understand that 10 pips is basically not much. There's folks that call trades that hit 100 plus pips. My system, I use the 10 pips because it's pretty quick. Paul, we have somebody, there you go. All right, so buy, just write these notes down. Buy, you're gonna add 10 pips. And when you go into a sell, you're gonna subtract 10 pips. So just remember that. So this is the market here. If you get into a buy, your take profit is gonna be above. You get into buy, for you to make money, the market has to go up. If you get into a sell, for you to make money, the market has to go down. So if we have to make money in a buy and it needs to go up, and a sell, it needs to go down, the take profit is basically saying, give me my money, I want it now, I'm done. So this is the market. In a buy, your take profit is going to be above. If you're in a sell, for you to make money, your take profit is going to be below. So when the market touches your take profit, it knocks you out of the trade, you made your money, and you don't even have to worry about that. What that does,
question,
that make you not have to sit and wait and watch your phone all day. All right. Somebody had a question?
me.
Go ahead.
Okay. So you said once the TP hits, repeat that last thing you said about.
Okay. So this is the market right here, right? Follow me. So if you enter a trade as a buy, for you to make money, the market has to go up, right? You got that. If you get into a sell, and this is the market here, for you to make money in a sell, the market has to do what?
Go down.
Go down. All right. So the TP, which is your take profit, is just saying this is what I'm comfortable with winning. Once the market comes up, if I'm in a buy, once the market comes up and touches my take profit, the market may continue to go above that, but once it comes and touch my take profit that I would plug in, it's going to knock me out of the trade. I made money. It puts my profit in my account.
Okay.
All right.
Okay.
Any other questions on take profit? All right. Stop loss. So stop loss is what you're willing to risk. All right. Now, depending on what type of trader you are or what type of trader you're following, you're going to understand some traders do not use stop loss. They're more focused on leveraging their accounts correct. So basically, when we get into leveraging, you'll understand how much your account can sustain, and the more leverage your account is, the more it can sustain in a pullback or it being negative. The higher your chances are in coming out in profit in most of your trades you call. So the stop loss is the opposite of your take profit. Stop loss is what you're willing to risk. So remember, we said this was the market here, and your take profit, if you were in a buy, would be above. Well, your stop loss is now going to be below. So it tells you, okay, I'm in a buy. For me to make money, my trade needs to go up. The market needs to go up and hit my take profit up there. But let's just say for some reason, it doesn't go up in a buy. It starts to go down. Well, if it touches my stop loss, it'll knock me out of the trade. And that's what I was willing to risk. Okay? So this is something you personally would use. You know, this standard is 30 to 50 pips for your stop loss. With my strategy, scalping, I don't use stop loss just because my account is leveraged right, so I can sustain a negative, so much a negative for the trade to turn back around. And you're going to understand this. When you start to use stop loss, you're going to start thinking the market watching you, because sometimes it'll hit your stop loss and turn around and go back and hit your TP. But your stop loss would have knocked you out of the trade. All right. So, for example, your stop loss in a buy, your stop loss, because you need to go up and make money in a buy, your stop loss is going to be below. If you're in a sell, for you to make money in a sell, you go down, so your stop loss is going to be above. It's the total opposite of your TP. All right. Anybody have any questions on stop loss? All right. Leveraging. When you set up your broker account, your leverage should be about 1 to 200. Different brokers say it changes up. I think FinPro is 200x. So most persons are using FinPro. That's what you would use for that. I want you to write this down as big as you can. Greed can cause over leveraging. And what that means is when you start to see how easy it is making money on your cell phone or on your laptop, it's simple, by pressing a button, buy or sell, you're going to start to get greedy. It happens to everybody. It happened to me when I started until I understand how this thing works. But you're going to say, okay, man, I just made 25 bucks in like 10 seconds. I just made 100 bucks in 5 minutes off of my cell phone. And you're going to say, well, let me try to increase my lot size so I can make more money quicker. And when you increase your lot size, your account may not be able to sustain your trading balance, and the trade can go, negative, maybe 20, 30 pips, and it can knock you out. So you have to understand leveraging is going to be key to your success in trading in the market. All right. Setting goals can prevent it. It can prevent over leveraging. With my scalping strategy, I basically have a goals outlined so everybody can follow. But depending on what type of trader you are going to become, you want to basically set your goals along with that. And you're gonna understand what type of trader you want to become through IML Academy or IML TV from following different types of traders. The reason I started to scalp because I wanted quick money. I wanted to be in the market fast, take my money and go. Some traders are swing traders where they can let a trade run all week or basically, sometimes months, but their outcome will be a larger amount of pips. That's where they make a larger amount of money on the pip count. But I like to go in and out real quick when it comes to scalping. All right. but you'll learn the type of trader you become once you start learning in our ML Academy. All right, so the same thing we just said, you know, buy versus sell, you can screenshot that, take a picture of that. You know, like I said, in a buy, your take profit will always be above your entry point. In a sell, your take profit would always be below your entry point. In a buy, your stop loss would always be below your entry point. And in a sell, your stop loss is always going to be above your entry point. So that's the same thing we just went over when I gave you the examples on the market. This is just something you can follow with. All right, so go ahead and take a screenshot of that, take a picture, whatever you need to do on that. All right. Okay, this is something new we added to the PowerPoint. Thanks to Paul again. And I also want to give a shout out to Melissa and Paul. Like, they've been helping me out, working with me really close. Melissa is helping me on the flyers, and Paul is helping me on the PowerPoint and recording and posting the videos on so that's, you know, I appreciate both of you guys. Entering a trade. You're gonna disregard, now this, if you're new, this is gonna look foreign to you, but this is key on how to enter and exit a trade. So you're gonna disregard the last digit of your entry point when you enter that trade as a buy or sell. So I may say buy, right? You click the buy button. Well, your entry price, your entry point is where you enter that trade if it's market execution. If I say sell, same thing. All right, so after you enter that trade, you're gonna get an entry point. And when you get that entry point, you're gonna disregard the last number, okay? And then you're gonna basically focus on the 2 digits after the decimal point. So for example, 144.456 was the entry point. We disregard the 6 and we're focused on the 45. So my eyes is strictly focusing on 45. When I enter, I'm not looking at nothing else but 45. Once you start to focus and understand what you're looking for, things will move really quick. So I'm looking at 45 and then I go into my notes. So in my notes, it tells me if I went into a buy, you know, I was gonna add 10 pips, and if I went into a sell, I was gonna subtract 10 pips, right, for your take profit. So that's just what we went over, add or subtract 10 pips and take profit. So we take the same number here, which is our entry point, we bring this down, remember we disregard the 6. We're looking at 45. So 45 plus 10, that's elementary math, that's primary school math, is basically 55. 45 minus 10 is 35. Once you can train your eyes to learn and understand what numbers you're looking for, it becomes so easy when you enter and exit in the trade. So in a buy, we're gonna add 10 pips, right? So 45 plus 10 is equal 55. Simple math. And you just plug this number in for your take profit in a buy. In a sell, you're gonna be subtracting. So 144.456, I disregard the 6. I have 45 minus 10 pips because we're in a sell. You're going to bring over 144.356. And then you do the same thing on your stop loss if you're using a stop loss. All right? Does everybody see this right here? If you see this part here, blow up the chat with ones. Okay, and then we have, okay. Thanks, Paul, for answering the question in the chat also. All right, so everybody got that. This just Forex 101, the basics. All right, let's see. So this is just an example of how your MetaTrader 4 is gonna look, all right? So let's just say we enter the trade and our entry point was 147.536. If we went into a buy, basically we would add 10 pips to the 53, and that would be 63. So that would have took us somewhere around this line here. So this is the market, and we would want it to kind of come up here somewhere. All right. If we got into a sell, you would subtract 10, which is 147.436, and 43 would have been somewhere down here. So we would have wanted the market to come down here. All right. So that's just a quick example of how it looks. This is how, before you enter the trade, how your screen is going to look. If you get into a market execution, you would want to have that. Now, if somebody call a trade where it says buy, stop, sell, stop, you're going to click this drop down bar here, and that's going to show you the options. All right. So here's the thing: your lot size, your lot number goes in here. You can screenshot this because you want to be able to go back to this information. All right. So your lot number is going to go right here. This number here can change. All right. Your take profit is always going to be to the right. All right. Your stop loss is always going to be to the left. And this is where you're going to plug in these numbers. So remember the lot size we talked about? That's what you're going to put here. Your take profit is what you're going to put here, and your stop loss is going to put there. Now, let's go back to this lot size. So when we talk about lot size, the lot size, it goes along with your trading balance. So for example, if you're starting off with $100 in your trading account, okay, your lot number or your lot size should not be no more than probably 2 cents. 2 to 3 cents max. Now write this down. If your lot size is 2 cents, for every 10 pips you hit, that's $2. Some people are probably looking at me like, what the heck I just got into? $2 for 10 pips, right? Now, you can have over $100,000 in your bank account, and the bank will probably pay you maybe $6 a month, if so. All right. If you have $100 in your bank account, you probably won't see nothing that they pay you, right? But you can make $2 from 10 pips from $100 account, $100 account. Then you're going to include, basically the spreadsheet where you can increase your lot size, because the larger your lot size, the bigger your balance would be with the same 10 pips you're hitting. So just how I said 2 cents for your lot size, every 10 pips is $2. If this lot size was 10 cents, every 10 pips would be $10. If this lot size was 50 cents, every 10 pips is $50. If this lot size was $1, every 10 pips is $100. If this lot size was $5, every 10 pips is $500. If this lot size was $10, every 10 pips is $1,000. You guys get where I'm going with this? It doesn't matter on the pip count. The lot size is where you're going to make the money. Now, here's the thing. You have to leverage your account right, where you're not being greedy and over leveraging and putting a higher lot size. So if we go back, and here's the thing, the 10 pips we talked about, we all could get in the same exact trade and have different lot numbers and hit the same 10 pips that everybody hit, but everybody money is going to be different according to this lot size. This is where you make your money, on the lot size. So you have to learn how to compound and grow this lot number every single day. All right, you have to, and that goes back to having a goal, having your plans. So for example, we said you had $100 and you had 2 cents. So basically 100 pips would a 2 cent lot size would be equivalent to $20. So if you have $100 and you trade the 2 cent lot size to start off with, your account can sustain over 500 pips in the negative, worst case scenario. That's what you call proper risk management. And the more leverage the more leverage your account can sustain in the negative, the more powerful you are trading, because the trade is bound to happen. Remember this: what goes up must come down, what goes down must come up. And if you're following a strategy from a particular trader that you're learning from, I guarantee you, like for example, I haven't seen any trade that I call went over 300 pips. So for example, you would always hit in those trades. But what happens is the average person is looking at it, man, $2, like 10 pips for $2. Well, here's the thing. If you basically did that for a week, I've consistently been calling about over 100 pips a week. So if you did 10 pips or 20 pips per day, 5 days a week, you can basically turn $100 into $120 in a week. Now your account is $120. You can probably increase your lot size to maybe 3 cents. And now every 10 pips is going to be $3 instead of $2. Now 100 pips for the week, instead of it being $20, it's going to be $30. And you just gradually increase that lot size, and you basically build your account. This is going to be key. Once you start to have a bigger lot size, man, like the same amount of pips, you can really clean up in the market, all right? Does anybody have any questions so far? Oh, we got to call them.
Yes.
Go ahead, let's ask the questions. I'm also going to go into my MetaTrader 4 on my phone, my app, and show you all how to trade. Everything we just went over, I'll show you how to plug that stuff in. But
Okay.
any questions? Go ahead.
So does the pips, does it always have to start with 10? Is that standard?
That's standard for me because that's what I learned. Like I said, we have some traders that really go for way more. I think Jamal, he some trades he calls like 100 pips. So just off if you leverage your account right, let's say with $100 and you trade 2 cents and you get in a trade with Jamal and he calls a trade for 100 pips, you can basically make 20 bucks off of that trade.
Okay.
And the market is moving pretty quick. The reason I do 10 pips because it's quick. I'm getting my money quick. I'm in and out.
Okay.
So that's why you have to really find out what type of trader you want to become. Sometimes some folks' schedule won't allow them to be a scalp trader. They may just want to set their trades and forget it because you can set the take profits and stop loss and you go on about your day. You don't have to look at the charts. When it hits your take profit or stop loss, basically that's where you make your money.
How accurate is that though?
It depends on what you're following. It's not just jumping in the trade and don't have an idea of what you're going in. It has to be if I call a trade, I'm going off of my strategy. So my strategy is scalping. So you have to have access to really, looking at your phone, or have a different ringtone for the trading group. So every time a message goes through in that particular trading group, that's different than your regular messages, and you can grab the phone up and look at it. Because I might say, put your stop loss in profit, and then that's a risk-free trade.
Okay.
So you just have to, like I said, us calling trades is just to help you make money while you're still learning. The ultimate goal is for you to learn how to trade in this market. If you don't learn this yourself, you screwed. You just basically turning the wheels, because guess what? If I don't feel like calling the trade today, you can't make no money. If all the traders don't call trades, guess what? Your money is on hold. So you want to be able to learn how to trade, because if you personally know how to trade in the market, you can go in the market 5 days a week, 24 hours a day, and clean the market up and make money.
So what are the different types of, you said scalping is one of the...
Yeah, the main ones is basically scalping and swing trade. Swing trade is long term. Then you have intraday, but mostly people go from swing trades and scalp trading.
So as a beginner, what do you suggest?
You personally, that would go with your personality, your time frame, your freedom on what you're doing throughout the day. If you're a busy person, the reason I'm a busy person, but when I scalp, I go in the market, make my money, and I come out. I don't let my trades run unless for some reason the trade went the other direction with news or something, some other indicator that didn't happen. But a swing trader, they may base, sometimes their trades is, a few hours, a few days. You just never know. Swing traders long term. They're waiting on a setup. Scalp traders, I want to get in and get out. That's the ultimate goal.
Okay.
But you'll figure that out, as you, learn, go to IML Academy, or as you follow a trader and you kind of see, you may want bigger pip counts. So you may say, well, I want to follow another trader and basically do that. And also you have IML TV, where you can actually log into IML TV and you can follow master traders that's 7- and 8-figure earners in the market and learn their system. The reason I created my little strategy is because, I took it from a few different traders, Dr. K, Stevenson Lindor, and then I got a few information from Jamal, and I just combined it to something that I wanted to do. And basically, I compacted into my scalping strategy. Most people that scalp, they scalp off the 1 minute and 5 minutes. I use the 15 minutes.
Okay.
All right. Any other questions? All right. What I'll do, let me log onto my phone so I can, so you can see. 1 second, guys. And this is the demo account. And I always recommend for anybody new that you trade demo until you're 100% comfortable in what you're looking at. I would never tell you to trade live and you guessing. You know, you always want to be 100% comfortable. That means when we go and do these trades, you're comfortable in there. So for new traders, or if you want to follow, this is the cloud. So first thing you want to do, to put the cloud on, you see the F to the top right. You can click on the F, and you can go to the main chart, click on F plus, and you're going to look for two indicators. The first one is going to be the Ikimoku Kinko Hyo. And that's the settings. You can just press done. Then you go back to the F, and I have the moving average also. For my second indicator, my indicator window number one, you go to F plus, and I have the RSI, which is the relative strength index. All right, so make sure you have that. You go to F plus, F to the top. Now, next to it, you see a clock. This is the time frames. I use the 15-minute time frame, but you can check the day to see the bigger picture. You can check the 4-hour, like you can check everything. So sometimes the trader will call, like I know some swing traders, they just look at the 4-hour and a day to get a bigger picture of what the trade is doing. If you want to go to 1 minute or 5 minutes, you can do that. Moves pretty quick, but I use the 15-minute. All right. So that's how you navigate that. So over here are the pairs. These are just the basic pairs. So for example, if you want to add pairs to it, you can go press plus. You could go to Forex. There's a few pairs in there. Or you can go to Forex to the bottom of it, FPT Forex, and you choose the pair, or you can just search it. All right. So if you see a trader call a trade with a pair that you don't see, this is where you would find it. All right. Now, so we have that, right? So we talked about a trade. So let's just say we're looking at GBP JPY, right? If I was to say everybody buy right now, and hey, I'm just guessing right now. I'm going over trading, so don't go jumping no trade. But if I was to say buy, so in this account shows $1,000, right? So I have to make sure I'm not over leveraged. So basically, let's just say if I trade 25 cents for this, for my lot size, I can sustain 500 pips. All right, so we go into here and we go to buy. You can either press buy from the top right. You see like a plus book. You can go into the market that way. Or if you go back to quotes, you can go here, click on GBP JPY, and you can go to new order. iPhones are a little bit different. That's why you need to switch over to Android. But if you have questions with iPhones, we can help you out that way. So the first thing we say is what? We're going to put in our lot size, right? Our lot size goes right here. So if I said, well, the max I'll do is 25 cents, I'm going to put 25 cents for my lot size. And this is where you click market execution. If I wanted to do a buy limit, buy stop, sell limit, sell stop, this is where I would click, and then they would ask you for the price and all of that stuff. But all of the trades I call is market execution. All right. So the first thing you do is put in your lot size. I have it at 25 cents. I click buy. So now the order is open. It's running, right? So you have a few things. Every trade you go into, the broker is going to charge you a commission. That's how they make their money. So for you to strongly be in profit, you have to cross over the broker fee first, and then everything else will be profit. Okay? So if you look to the left where it says SL and TP, it shows blank. So now that the order is open, you would hold down the order, you would go to modify order. Okay? Now, if you look to the very top, now let me go back because the iPhones are different. So the iPhone, be in profit. Y'all should have gone in. No, don't go in it. But in the iPhones, the way you're going to find your entry price is right below where you see GBP JPY. You're going to see the entry price is 143, 0.200. If you have an Android, when you go to modify, you'll be able to see it to the top also. So I want somebody in this group, go into the chat and type in my take profit. We're in a buy, so go to your notes and tell me what my take profit is going to be. Type in the chat, someone. Simple math. Disregard the last number. Focus on the two numbers behind the decimal point and do your calculations. All you're doing is adding 10 or subtracting 10. There you go. So look at my screen. They put in the chat 143.300 is going to be my take profit. And then you click modify. The order is now modified. Oh, we making money. All right, so you guys see the TP has that plugged in. Now I tell you, in my trades, I don't use stop loss, but if you was to use a stop loss, you would put the stop loss over here to the left. And you would do your calculations on adding or subtracting whatever your stop loss is going to be. Okay? So now your trade is running. So now you guys see we're strongly in profit to the top because we covered the broker. And this thing is moving. So when you look at it at the chart, you guys see down here, this is where we enter the market. We bought in at 0.25 right here as a buy. And we calculated 10 pips. So we're making money off of this candle here. As this candle go up and hits this take profit line, it's going to knock us out of the trade. Okay? So if this candle was going below this line here, then we would be in the negative. This would be going down. All right? So we're making money off of these candles as it go up and as it go down. So here's the thing, before you ever knew anything but Forex, you used to see stuff like this, like you're in the hospital with that thing beeping. This is what, when I first started, this is what I saw. I didn't see nothing else. But as I start to learn, guess what? I zoom in and I understand that I make money off of these candles right here. So as long as this candle here is above this line where I bought in, I'm making money. So remember, somebody type in the chat, if my take profit hit at 25 cents, with my lot size being 25 cents, what will my profit be at the end of the day? Type in the chat. Off of a 25-cent lot size, once my take profit hit 10 pips, what will my money be that I made? How much money would I have made once it hit my take profit? $25. There you go. Simple math. You have, and the reason this is important is because you have to understand how this thing works. If you don't know how much money you're going to make when you get in the market, you just roll the dice, and eventually you're going to lose your money. You have to learn this information and study it and study it and study it until you master it. Now, here's the thing. If you feeling like, hey, okay, I'm up a couple of dollars, I don't want to wait for it to hit my take profit, then guess what? You can come here, you can modify, you can click on it, and you can close the order. It's telling me close down with 978. Bam, I just made some money. You go to history. The reason I made $9.99, but remember they charged me $2.50 commission. So my total profit was $7.45 is what I just made. Does that make sense? If you guys understand what we're doing right now, just type ones in the chat.
I have a question.
Go ahead.
Okay, with the commission, does it take a percentage of what you make?
No. Or they charge you commission regardless if you win or lose a trade.
Oh.
That's how the broker makes money. So the broker, when you sign up with any broker, the broker was free. It was free, right? The broker is where you go and make money in the market. You can't trade in this market without a broker. So they have to make their money on the flip side. And this broker has nothing to do with IML or nothing. If you was to just trade by yourself without IML, you would still have to find a broker. But for them to make their money, they charge you a commission on every trade you enter. Somebody said you made my hour rate in seconds. Yeah. and this and you guys, just how we did this, if this was a live account, we would have made that money just now also. And we should have stayed in because it's still going up. Any other questions? Everybody okay? Go ahead.
Okay, so it isn't a set percentage that they would take for commission, you're saying? So how do they determine, or it's just up to them to decide how much to take?
So each broker is different. And this is why I recommend FinPro. So for example, if I'm trading a dollar lot size, they tend to take 10 bucks. So that means if you're trading 10 cents, if you're trading 10 cents for your lot size, they may take maybe like 10 cents for commission. The lower, the larger your lot size, the larger the commission will be. So
Correct.
if you're trading 10 cents, go ahead.
Okay. I understand that, but it isn't a set rate or set percentage.
Yeah. So their percentage, so basically on that, their percentage would be what, 10 cents or whatever your lot size is.
10%? Okay, all right. Okay,
Yeah.
thank you.
Now, and different brokers, they have different rates.
Okay, I do with FinPro.
Yes, some brokers don't charge a commission, but then what they'll do is they'll give you a larger spread. That means you would have to cover more in the market. So for example, let me show you what's a spread. So you guys see right here, you see a blue line and you see a red line, right? In the middle of this is what you call a spread. So here's the thing. Let's say I was to enter the market, right here. Oh, it's going up. If I was to enter the market right here, for me to go in profit, this blue line has to cross where I entered before I'm fully in profit. So the middle, what's in the middle up there is what the spread is. And that's what brokers use also where they make their money. So some brokers have a larger spread, but FinPro spread, like you can basically get in profit within 1 pip. And that's why I love FinPro.
Okay. All right, thanks.
All right. Do we have any other questions? Does anybody have any concerns on how to do this? This is just the intro. The reason I'm going over this is because we have a lot of new persons that came on, and I want to make sure you at least know how to enter and exit a trade. All right. So let's do another one. Let's say we wanted to sell. We would put in our lot size. Let's see if I put in, 30 cents. Oh, that's $30. That's a nice hit. If I $30, 30 cents, and we go in as a sell. So iPhone users, you would have to put in your entry point right here. So if you're new, you can write this down. So your entry point would be 143.227, right? So somebody put in the chat what my take profit would be. And look, remember, we're in a sell. So you would modify it. Somebody put in the chat what my take profit would be. Not all at once now. $143.127. And that's all we did was we subtract 10 from 22. You modify it. What just happened? You modify it. Connecting, 1 second, it's connecting. I think my Zoom just ran out. One second, guys. All right, so you modify it. It didn't modify, so let me put that back. 143.127, modify it. It's locked in. Where's my connection? All right, so it's locked in. All right. And basically, the reason it's going back down. So you see here, this is where we enter. We enter as a sell, and this thing is going. So if this comes and touch this line here with a 30-cent lot size, we would make 30 bucks. All right. So right now we're at $8.54. If we wanted to, if we didn't want to close it out, we could just let this run. And once that hit that line, it's going to knock us out in profit. But if you didn't want to, and you said, hey, I just made 11 bucks, 10 bucks, I want to close it. You close it, see it's dropping. The market goes as you talk. Every second this market is moving. So this one here, our commission was $3. We made $8, so $5 with our profit. So we just made $12 in basically less than 5 minutes. All right. Does anybody have any other questions over this? All right. So what we just went over is just the basic information on how to enter and exit a trade. All right. Oh, somebody had a hand up. Vincent, you have a question?
No, all it is our time frame. We're different. We're off like an hour. So our screens are off by an hour.
Let me see. Go ahead and share your screen. Share your screen. We'll look at your screen and see. We'll fix it.
Yeah.
What kind of phone do you have? An iPhone or Samsung?
Samsung.
Good job. You're my friend. Go ahead and click share and click screen. So go ahead and go to MetaTrader 4, Vincent.
All right.
Guess what? If we had stayed in that quick sell just now, our take profit looked like it just about hit us at 13, and we actually our take profit was at 12.7, 143,127. So we would have had 9 pips. So we'd have made like almost $27 right now running. All right, so let's see. What was your question? Show me what your question was, Vincent.
Okay, what it was I was asking that my chart and your chart don't have the same numbers on it. We're like more than a 10 to 20 pip difference whenever plug in a trade, although they were supposed to be on the same time.
Are you using what's your broker?
FX choice.
That's the reason why. So I use FinPro. So FinPro, their spreads are different than FX Choice. So FX Choice, you have more, you have a larger spread that you have to cover before you go in profit. So that's what it is. So for example, you see you're at 17. Let's see, that's 17 and 23. So that's basically almost 6. That's huge. Yeah, that is a big spread. So that's why with my strategy scalping, I wouldn't use that unless you're using I think it's another account that FX Choice have. But basically, what the amount of pips you're actually covering in your spread is what, almost 6 pips. I could put my stop loss and profit at 6 pips and basically make almost make that twice. So Jamal said use the use the pro account. So the pro account with FX Choice have lower spreads. So here's the thing, guys. That's a great question, because you can use other brokers and then you would be trying to follow a trader, and basically you're losing money and they're making money because your spreads is not right or you don't have your account set up right. So that's a great question. If everybody looked at GJ, so you can stop sharing your screen real quick, Vincent.
All right.
So does that answer your question?
Yes, it does. Yes,
All right.
it does.
if everybody looked back at GJ, that TP we call would have just hit. It would have just hit. So that we would have made, on this, we would have made 30 bucks without take profit hitting. All right. So just how we talking in the market moving, you could be making money if you know, if you follow in a strategy and you know what you're doing. All right. Somebody say, David, I meant stop loss and profit. All right. Let me go ahead and I'll do one with stop loss and profit. Let me log back on with my phone. So remember, RT, if you wanted to verify the information, right, we can go back to here. This is where we went into a sell. Our take profit was 143.127, right? If I wanted to go back and verify that that hit, basically right now it's at 143.11. So 127 is right here where it hit. If you guys look, the wick of this candle actually came down and hit the take profit. So we would have made 30 bucks off of that call, that call just now. Now, you guys saw when Vincent showed his screen where it's like 6 pips different. Well, here it's like less than 1 pip. So that's why, you know, I use FinPro on that. So let's go ahead. You want to know stop loss and profit. So let's just say I went in this trade and I went in, let's say I use 30 cents, right? I went in as a buy. All right, now let's just say we modify. Now our entry point is 143.120. So we're going to add 10 pips to that. So I'm looking at 12. So I'm adding 10 to 12. So my take profit will be 143.220, right? Bam. That's where we're at. So stop loss in profit. So for us to get in profit, guys, we have to make sure that both lines are in profit. So right here is where we entered. 143.120 is where we entered. So stop loss and profit, we want this 12 to at least hit 3 to 4 pips, which is, you know, 14 or 15. So once this blue line gets to that, or even so, if we want to just protect ourselves and we have a straight profitable trade, what we would do is we would go back to modifying it, and we would come over here and put your stop loss in profit. So we enter the trade. We enter the trade at 143.120. Right now, the trade is at 143.152. So we could come here and put our stop loss at 143.140, right? And that would be 2 pips that we would have made. So what that does is that's a risk-free trade. So this, see, it knocked us out of, before I even talked about it, it knocked us out of the trade in profit. So we made $5 after the commission. Basically, we profit $2 from that. But guess what? That was a risk-free trade. You basically came here and your TP was 143.22, which was 10 pips above your entry price. And when you got in profit, you put your stop loss in profit above the 12, but in the middle of the take profit. Does that answer your question? Does that answer your question on stop loss and profit? Once, if you understand how to do that, it's game over. It is game over, because that stop loss and profit is a risk-free trade. You still have your take profit at the end to basically knock you out of the trade with your money that you basically had lined up, your profit that you wanted to knock out. But your stop loss said if it did drop, it would have knocked you out in profit. All right. Most traders, when they use stop loss, they use a stop loss, like we said, is what you're willing to risk. Well, in this situation, I was only willing to risk some of my profit I already hit in the market. Hello, that's straight game right there. No sweating, no stress. No matter what the trade do or the market does, you still gonna come out in profit. Man, we having a good day. I already hit 3 blues. All blue is money. All right, Jessica, you have a question. Unmute yourself, ask the question.
Yes, okay. So what is the benefits of using having leverage opposed to stop loss? Because previously you mentioned that you don't use stop loss, you prefer leverage. So what is the benefits of having leverage? Or
Okay, so stop loss in profit. Okay, so stop loss, let's go back to stop loss by itself. A stop loss in the notes is what you're willing to risk. Okay,
right.
so that's basically you losing money with a stop loss, right?
Mm-hmm.
So you put in the margins saying, okay, this is what I'm willing to risk in this trade. Now, here's the thing. If your account, if you call a trade and you plug in your take profit and it starts to go in the direction of your take profit, if you put a stop loss in profit, so if you watch my strategy video training, you will understand that that's the only way I actually use a stop losses in profit. But starting off in the trade, I don't use a stop loss because my accounts is leveraged, correct. But as it go in the direction of your take profit, you put that stop loss in profit. So even if the market turns around and goes the opposite direction that you're expecting it to go, it knocks you out of the trade in profit. Does that make sense?
Not really, but
Not really.
no.
Tell me why.
Okay, so you're saying if you're in stop loss in profit is basically how can I put this? Okay, you won't go in a trade with a stop loss.
Correct.
You would just use your leverage.
Correct.
Okay, so for a beginner, what would you suggest?
I suggest you use a 30 to 50 pip stop loss so you don't blow your account.
Okay. So
now here's the thing. Sometimes if it hits you, and this is why demo account is so important. This is why it's so important, because you want to practice so you can understand this thing. Once you understand, here's the thing. A lot of people, when they start to trade or when they first learn this new foreign exchange market in trading, you're so excited, you're anxious. You're like, it's kind of like you on drugs. Like you got that itch, like you got to go trade, right? And then you may demo for a day or so, and then you like hyped up. You want to go trade live, but really mentally you're not ready for it. Like I would tell you, trade your demo account until you get to probably about 25 profitable trades. Straight 25 profitable trades. And when you trade your demo account, you want to trade it just like it was your live account, like it was your live money. And what that's going to do, you're going to create a habit. And what the habit is going to be doing is teaching you how to trade your live account. So when you do get in your live account trading, nothing changes from your strategy and your system you're doing. So my recommendation for anybody that's new or still having problems on being consistently profitable, it doesn't hurt to go back and start demoing again. Back test your strategy or whoever strategy you're following until you can consistently hit profits. Because you want to make sure when you go live, you're consistently hitting profits. Does that make sense?
yes.
So demo is going to be your best friend when you first start. And until you're 110% comfortable, like you guys see, I'm calling these trades in here, and I'm not even like sweating or like I'm just plugging them in. Just plugging them in, and then basically going about my business, showing you guys what to do. I'm not telling you guys to call these trades, go on these trades with me. I'm just showing you that's the confidence. Like you shouldn't be stressed out when you're trading. You have to mentally detach yourself from this money and trading so you can just do what you're supposed to do and follow your strategy, follow a system. All right. Do we have any more questions?
So when you enter the trade, after you choose your lot size, then but how do you know what currencies to go? If I want to do pounds against yen or USD against pounds or something, like how do we calculate that or decide which ones to trade through? Like, how does that work?
The only trade I personally use is GBP versus JPY. The reason I just trade that is because I basically follow all this movement everywhere it go. I mean, the news, like you name it, I can tell you what's going on with GJ. You're going to determine that through your training in IML Academy, or certain traders have certain pairs they, 3 to 5 pairs they choose from. The reason I use GJ is because it moves it moves fast. The pip counts are good. Some traders, they can go to any, if you become a scalp trader, you can go through, I'm not a scalp trader, a swing trader, you can go to any pair and basically mark up a chart and do it. Even with scalping, I can go to any pair and follow my same strategy. So the main thing is not really the pairs. The main focus is going to be learning your strategy. Learning the strategy that you're going to follow, and you're going to dot your I's, cross your T's no matter what. Like, you're following that down to the nitty gritty. That's all you're going to follow. Once you've learned that strategy, it doesn't matter what pair you use. Doesn't matter what pair you use. But in IML Academy, it goes over some of the major pairs you want to trade. And you have different different sessions that open. All that's going to be in the academy also. So, but just major pairs are pretty good. That's what I would recommend.
Okay, thanks.
Right? But learning the strategy is going to be key.
Okay.
All right, so guys, that's it for the intro to Forex training. We'll jump back on in about 10 minutes to go over the scalping strategy. And this is just one of the many few strategies you can use in trading in the market. All right.